Genting Malaysia saw its net profit skyrocket 15-fold to 177.4 million for its third quarter, the group's highest quarterly profit since the COVID-19 outbreak in the first quarter of FY 2020, as its leisure and hospitality businesses continued to recover. During the previous year's corresponding quarter, earnings had come in at just 11.38 million ringgit. Revenue improved 19% year-on-year to 2.71 billion from 2.27 billion, as business volume was higher in Malaysia, UK and Egypt, while the group's US and Bahamas operations enjoyed higher contributions from Resorts World New York City. Going forward, Genting Malaysia said the positive outlook for international tourism is expected to be sustained, although macroeconomic concerns could continue being a critical factor in the effective recovery of the tourism sector. Commenting on its hilltop resort in Malaysia, the group said ongoing upgrading and development works at the Mid-Hill are progressing well, with new product offerings and attractions in the pipeline. In the US, Genting Malaysia said it is exploring opportunities to reinforce its competitive position in the region, which include developments surrounding the New York Gaming Facility Board's request for application to solicit proposals for up to 3 commercial casinos in New York State. Meanwhile, Mothership Genting saw its net profit more than quadruple for its third quarter, from 128 million to 520.5 million ringgit, due to the recovery of its leisure and hospitality businesses gaining further momentum. Also helping was lower impairment losses, lower net finance costs, higher share of profit in JVs and associates. Quarterly revenue grew 20% year-on-year to 7.4 billion ringgit. YTL Corp posted its best quarterly net profit since 2006 at 521.7 million for its first quarter, as contributions from all its business segments grew, save for construction. This represents a 14-fold increase from the previous year, where earnings came in at 36.6 million ringgit. Revenue for the quarter rose 15.9% year-on-year to 7.52 billion from 6.49 billion previously. In the latest quarter under review, the conglomerate's two biggest contributors were utilities through YTL Power International, in which it has a 49.08% direct and a 6.49% indirect stake, and cement and building materials through 78.58% indirect owned Malayan Cement. Executive Chairman Tan Sri Francis Yeo Sok Ping says the cement segment saw higher volumes and stabilization in selling prices for both domestic cement and ready-mix concrete, offsetting the impact of higher energy costs. Meanwhile, the utility segment recorded better margins and the strengthening of the Singapore dollar against the ringgit, while the water and sewerage through Wessex Water UK saw higher revenue but continued to be affected by higher interest accruals on index-linked bonds. On its biggest contributor, YTL Power, net profit rose nearly fivefold to 847.9 million from 173.3 million, mainly from its Singapore electricity generation and retail operations. Its investment holdings posted a huge turnaround to pre-tax profit of 112.57 million from losses of 6.5 million, in which it pointed to the upcoming data center in Kulai, Johor. Sugar refiner MSM Malaysia Holdings' net loss narrowed to 36.06 million for its third quarter, thanks to improved margins from higher average selling price, lower freight costs and better capacity utilization. Revenue grew 21% year-on-year to 806.7 million from 668.1 million a year ago. Despite stronger demand from local and export markets, MSM said the prevailing high input costs continue to impede the improvement of the group's financial performance. MSM said the joint sugar industry requires urgent government intervention to increase the price of sugar or subsidy for the retail segment to ensure food security and long-term sustainability of the industry. Group CEO Syed Faisal Syed Mohamad pointed out that Malaysia's sugar control price is the cheapest in the region and the world, representing an anomaly in economics. He adds that many other countries in the region have increased sugar prices, such as Indonesia and Thailand, and is seeking the government's support on a price normalization to help overcome high input costs. Syed Faisal said that MSM are taking all measures to ensure return to profitability and will ensure uninterrupted supply of sugar in the market. SP Setia saw its third quarter net profit decline 26% to 51.8 million compared with 70.2 million previously, despite quarterly revenue improving by 25% year-on-year to 1.08 billion on the back of improved performance from all its business segments. However, SP Setia managed to surpass its sales achieved from last year, recording 3.89 billion for its 9 months of FY 2023 on the back of land sales and strong demand for its offerings. As at end September, the group has secured bookings of 450 million and currently has 44 ongoing projects and unbilled sales of 6.76 billion ringgit. SP Setia also announced today the disposal of 17.99 acres of land in Setia City, Selangor for 228.8 million in cash to KSL Bestari as part of its ongoing efforts to optimize its portfolio. The developer currently still has an effective remaining land bank of 5,549 acres with an estimated GDV of 113.11 billion ringgit. President and CEO Datuk Chung Kai Wai said that SP Setia remains optimistic of the future of the Malaysian property market and will continue to pursue growth opportunities both in Malaysia and overseas while keeping vigilant over its capital structure and effectively pursuing de-gearing initiatives, which he says will significantly improve SP Setia's financial flexibility. The Sarawak government is currently conducting due diligence on MASWings in preparation for its acquisition, the Sarawak State Legislative Assembly was told on Thursday. State Deputy Transport Minister Datuk Dr. Jerib Susil said negotiations are also ongoing with Malaysia Aviation Group and Khazanah Nasional to acquire the shares in MASWings. He was quoted by Bernama as saying that the takeover will be in stages and the operation of the Sarawak-owned airline will only commence once the whole takeover process is completed and finalized. Sarawak-owned Hornbill Skyways, which has been operating air charter services in Sarawak since 1977, was mandated to take over the ownership of MASWings and operate rural air services in Sabah and Sarawak. Sarawak Premier Tan Sri Abang Johari Openg had said that the state government aims to make Kuching the airline's main hub and expand the carrier's routes to regional destinations including Australia, Hong Kong, Singapore, Japan, South Korea and India. However, he said MASWings would not be profit-oriented as the aim of the expansion is to serve the people.